morning, good afternoon, and good evening. And thanks for your interest in S&P Capital IQ third and final Q&A session from our Corporate Valuation webinar series. I am Silvina Aldeco-Martinez, Managing Director for S&P Capital IQ, and I'm joined today by Bikesh Mistry, Senior Modeler at S&P Capital IQ. As with the previous two webinars from this series, we received a number of questions in relation to this one. We were not able to address some of those on the day, and as such, we wanted to follow up with a short video clip to address these remaining questions. All the three Q&A sessions are available on your S&P Capital IQ YouTube channel, where if you have any questions, you can get in touch via the phone number or email address provided at the end of this video. So let's turn now into the actual questions received from the webinar. Let's set the context with M&A activity across Europe. If we were to look at the same time last year, how is M&A activity looking like?
So looking at year-to-date M&A activity across Europe, we're seeing in and around 7,000 deals completed, standing at a total deal value of 162 billion. On a standalone basis, that is reasonably high. However, when we put that against performance for last year, year-to-date we were looking at 8,800 deals with a total deal value of 262 billion. So on that basis, we're actually seeing a decline of close to 25%. So they're close to a quarter down on where we stood last year. Looking within specific parts, Europe against APAC and North America, the region is actually again performing relatively worse off by comparison. Both North America and Asia Pac are relatively flat, but haven't experienced the same declines. And the general consensus tends to be that even given the quantitative easing measures that are in play at the moment, the general economic outlook for EMEA is having quite a drag on deal activity and valuations at the moment.
Yeah, definitely, that doesn't look very bright. However, would you say, are there any particular regions in Europe where deal volume or deal activity is still solid?
We have actually recently done a series of articles focusing on M&A activity within SMEs within the region, and that makes for some quite interesting reading. As you would expect, there are certain regions within Europe where, in fact, the SME space drives the economy and M&A activity in general. Now, looking at specific regions, we can see that the UK, Germany and France as being the largest players within the European Union at the moment, deal volumes there are relatively flat. However, looking at Nordics is something of a standout group of countries at the moment.
Thank you. That's actually interesting. We should actually keep an eye on SMEs. So changing the angle slightly, let's move now to an ex-post momentum. We talked about M&A consequences of mergers. We have heard from our audience that the exercise of determining whether a transaction has been accretive to the shareholders, it's particularly challenging and play with assumptions. Can you elaborate a little bit more around these challenges?
Sure. So when we're looking at deal values and value realization from M&A activity, it certainly is something very difficult to determine. I would say it's more of an art than a science. Ultimately, when we're looking at any deal, the purpose is to generate additional value, whether that's for private investors or for public investors. There are two angles that we can take that where we see in general where M&A activity is driven. One is where the acquired firm is able to operate independently. Let's call that as operating as a subsidiary. In those cases, valuing the additional value to the acquirer is typically easier in that we're able to look at the entity on a standalone basis, separating out its operations and seeing how the overall impact to the parent is increasing or decreasing value. The second perspective is where the acquirer integrates the acquired firm completely. In those cases, it's much more difficult to actually pinpoint where value has been generated. And again, the ultimate objective, whether it be strategic or financial in terms of why the deal took place, is going to influence how and when value is created.
Thank you, Vikesh. So given all these challenges, what assistance can S&P Capital IQ platform provide when it comes to benchmarking deals or purchase price?
Our clients find our screening tool the most valuable in that it allows them to combine quantitative and qualitative criteria in deriving a list of comparable transactions. It is also used in deal generation in terms of deal flow as well as deal origination. Going back to the point of valuation and benchmarking, what we're able to do is combine qualitative factors such as regions, industries, and then overlay valuation data, so multiples and then total deal valuation, fee structure, financing structures, and taking this combination of information to create a benchmark and use this across a variety of scenarios allows you to infer pricing for deals as well as benchmarking. There are other tools within the system, specifically our quick comps, which we can use for generating comparable transactions when analysing completed deals. And we also have a suite of Excel templates produced by our modelling group, which create great efficiency and can lead to cost savings.
Thank you very much, Vikesh. One of the areas where we see a lot of opportunity within M&A is frontier markets. On the one hand, there is an opportunity for improved returns, but on the other, there is much more opacity in terms of pricing and undeveloped capital markets. What difficulties does this bring when it comes to financing or structuring M&A activity within those markets?
Investors are certainly looking at the emerging markets and frontier markets both from a returns perspective and a diversification perspective. So it's a very interesting question from that angle. We here at S&P Capital IQ are certainly looking at different approaches to tackling that problem. At the moment we are looking at tools that allow you to reference price or infer prices through yield curve modelling as well as fixed income screening to look at asset prices within those markets. And this is where we're looking to tackle the issues such as the lack of depth and data scarcity.
Thank you very much, Vikesh, for all your insights. If you're interested in registering for this upcoming webinar or would like access to the replay, simply email or call us using the details provided at the end of this video. We hope you have enjoyed the webinar series, and if you have any comments or feedback, don't hesitate to get in touch. Thanks again from all of us here at S&P Capital IQ.